Hey, what's up guys? Brandon here, Legacy Group Real Estate Team. We have your Oakland County April 2020 real estate market update. So let's jump right into this. However, I know things are just absolutely insane right now. We've had absolute massacre in the markets. The wind is acting up here just as the markets are. And I hope that you are finding some positives out of this time. I hope you're staying healthy and your family. I hope you're having some positives come out of all this, and your mind is open to seeing some of the positives that are coming out of this. I know I just listed 20 actually in my journal today, 20 things that my wife and I have changed, our family has changed, positives in our life, and being thankful for the time we've had at home together, and really a change in life that has really benefited us, to be quite honest. So I hope that it's found, you found some of that as well. So let's jump right into this. Oakland County, April 2020 market update. This is going to be a little interesting, so let's do it. Days on market. Actually, first thing, we always do 3 years because that way we can see the trend. The trend is your friend. Remember that. It's going to be more important than ever to see that trend. And this is why we've been doing these videos for 4 years, because of times like this when we see absolute chaos in the markets, and then you can go back and watch those videos. You can see the trends, and you can see the trends here and see exactly what is going on. So that's why we have that, and then we have the month in arrears because now we have all the data. It's hot off the press. So days on market. DOM, 46 2 years ago, 54 last year, and then 53 this year. So a little bit of a decrease. Again, we're seeing that across the board. Short term, big time deflationary event. Buyers having to stay home, so demand is way down, and you're going to see that down here at the bottom as well, and you're going to see that here as well. You're going to see some incredible numbers just all over the board. So it's crazy. I love numbers. I love data, so that's why it's just absolutely incredible what's going on here. Active number of homes, that's a 1 day sample size. So how many homes are on the market that day when the data was taken? 3881 2 years ago, 4408 last year, and then 3695. So a huge decrease this year, back down under 2018 levels. And that is, again, we're seeing this very similar numbers across the board again. Months of inventory, 2, 3, and then 4. We're now up to 4 in Oakland County, which is, again, incredible. We're now into balanced territory, and people might say, well, why? There's less homes in the market. Shouldn't prices be going, in more of an inventory crush? Why are we not seeing prices go up even more? Well, we are actually seeing prices go up, as we're going to see here in a minute. However, it's still going towards more of a buyer's market because we've had such a deceleration, such a deflation in buyer demand that you still have the market's going this. They call it, a lot of times they'll call like indeflation, or there's different terms for it where you have inflation and deflation in the market at the same time. So truly remarkable what's going on right now. It's very rare to have opposite market forces going at the same time. It's truly remarkable. So like I said, 1 to 3 months is a seller's market, 4 to 6 months is a balanced market, and then 7+ months is a buyer's market. And we saw that in the Great Recession. We saw things going up, which I tend to think, being on that edge of the coin like we always talk about, you want to be able to see both sides. You have some experts saying that we're going to be absolutely decimated in millions and millions of foreclosures in the next year or two, and then you've got some saying, hey, this is great, look, prices are going up, things are good. I tend to be on the side that we're going to have more problems going forward than we aren't, because I feel like you have to take, I look at things very macro. I study the macro, and I study global happenings, and I think the people that are more micro focused and saying, hey, it's more of a local game, I think that, one, they're right, real estate is very local. However, when you have everyone has to stay home and everyone's got to do this or that, it's affecting everyone. Where sometimes when the economy experiences hiccups, you see things more local, and their wind is just not cooperating right now. So anyway, this is, I think we're going to see, because we've had such huge issues, and we've seen the Fed printing, trillions. They're going to be probably, if you watch this video next year, they're probably going to be 10+ trillion printed in this next 12 months. We're in for some interesting times. I just think we're going to have more problems going forward, which is going to affect people's jobs. It's going to affect a lot of things going forward. So whether that's the government bailing people out, I don't know. It's a different story for a different day. But the history tells us we're going to have a lot of problems. Now, the Fed and the governments are doing a lot of things that we've never seen before. So maybe they prop us up again one more time. Who knows? So we'll continue to revisit this, and this is why this is so important right now. This is why this is so incredibly important. And I feel like that we're just like a coyote running off the cliff right now, chasing the roadrunner, and we are just running straight still because we had so much momentum. We just haven't looked down yet, and I feel like that's where we are because we're so close to the epicenter still. So back to this. That's for different videos and different time. I have another video coming up soon about negative interest rates. That's been talked about. I have a feeling that might be coming here in America. I know the Federal Reserve Chairman Powell said last week that that's not going to happen, but got to read between the lines. New homes in the market. Now, this is a month-wide number. All the new homes in the market, and this was going to boggle your mind. Every single county, this is going to absolutely boggle your mind. 3264 2 years ago, 3447 last year, and 1,034 this year. Are you kidding me? Down a third. I think the last county we did, I think Macomb was down 50%. We're down, or no, 75%. Another county was down 50%. We're down a third, so we're down 30-40% here in new homes that were on the market in Oakland County. Or, sorry, my goodness, we're down 66%. So staying with the theme of what's been going on, 75%, 66%, 50% down. This is just remarkable. That's mind-blowing what's going on right now. And this is why, again, knowing the numbers and seeing the trends and the patterns, this is where you can start to see, okay, this is going on here, this is going on there. You have to be able to see some of these things and be able to kind of read between the lines sometimes as to like, wait, why are these numbers going up and some of these other numbers are going down? You have to be able to kind of see that in order. It's like learning another language, right? When you're speaking the language of finance or whatever it might be, you're speaking another language, and once you speak that language, then you can start to position yourself appropriately. Price per square foot. 124 2 years ago, 128 last year, 139 this year. Again, remember, we have such a deflationary event. Prices went up briefly in all the counties because we're so close to it. We have an inventory crush. People, and you're still thinking real estate moves slower, so you're still thinking, oh my gosh, I'm still racing against the other people. Stock market moves very fast, but the real estate market moves slow. So people are still in that mindset of like, oh, it's going to take a few months. They still think that it's crazy. So just incredible stuff here. If you multiply this by your square footage, it'll give you the approximate value of your home. But again, you have to have someone on our team or an appraiser come out and give you an actual value in your home, because this is a county-wide number. And then numbers sold. This is the people actually closing on their home, sitting down at the closing table. 1798 2 years ago, 1706 last year, and then 1,008 this year. That's huge, huge drop off again. That's 40%, I don't know, something like that, right around there, 40% drop off. That's absolutely remarkable. Just incredible what's going on. So anyway, this is, like I always say in all the videos, this is why this is so important in watching these videos every single month, because I always say, unless there's some type of calamity or some type of anomaly, some type of catastrophe, this number doesn't change too much. It's a pretty consistent number because this is the buyer demand, actually. Well, now we've had one of those events. So it's coming to fruition, all the things I've been saying over the years, and now you're seeing this number just absolutely sliced and diced. So this is huge. This is major things to come. So please, if you're on the podcast, @Legacy Group MI, @Legacy Group MI is the Facebook and YouTube channel. Go there, question, comment, concern, tag people who might need to see this, or you might know people in these areas. Please go share it with them. It's just so important. I think there's some incredibly difficult times ahead, but there's also it's massive opportunity for those that are prepared. Whether, like I said, you need liquidity and getting an equity line in your house, or you need to sell your house and move to somewhere else. There's options available, and you have to know where you're at in order to do that. So appreciate you guys, your time and energy. Your time and your energy, it's the most important thing that we have. So I appreciate you sharing with us right now, and we'll see you very soon.